Imagine losing over $20 million every single day due to a delay in policy implementation. That's the reality facing 7 major Japanese automakers, as the U.S. postpones reducing tariffs on automobiles, a move that was supposed to happen under a recent agreement between the two nations. This situation has sparked concerns about how much of the added cost should be passed on to consumers, and whether doing so would further dampen already fragile demand. But here's where it gets controversial. While some argue this is just another bump in international trade relations, others see it as a sign of deeper economic tensions. Among these automakers, Toyota Motor is expected to bear the brunt of the financial hit when it comes to the heightened U.S. tariffs, which are projected to significantly eat into its profits for the fiscal year 2025. The company has built a reputation for resilience in global markets. But even Toyota isn't immune to such sweeping changes in trade policies. For instance, if you're familiar with how supply chains work, you'll understand why shifting production or absorbing increased costs can create a ripple effect across operations. And this is the part most people miss. Tariffs don't just impact one aspect of business. They disrupt everything, from manufacturing timelines to pricing strategies. It doesn't stop there. Export-focused companies like Mazda and Subaru are also feeling the pressure. These brands rely heavily on overseas sales, particularly in the U.S., making them especially vulnerable to tariff fluctuations. In fact, their reliance on exports means any prolonged delay could result in a cascade of challenges, including reduced profit margins and potential layoffs. Think about it. If your primary market suddenly becomes less profitable, wouldn't you start looking at other options? Yet, finding alternative markets large enough to compensate for lost revenue isn't easy. So what does all this mean for Japan's auto industry moving forward? On one hand, some experts believe this scenario highlights the need for diversification, both in terms of export destinations and localizing production facilities closer to key markets. On the other hand, critics might argue that focusing too much on avoiding tariffs risks undermining the very foundations of globalization that have driven growth for decades. Is it time for Japan's automakers to rethink their strategies entirely? This brings us to an important question worth debating. Should governments step in more aggressively to protect industries affected by volatile trade policies, or should businesses adapt independently without seeking external support? Share your thoughts below. Do you think the current delays in tariff reductions are justified, or do they represent a failure in diplomatic negotiations? Let's discuss.